Good evening, traders and investors. Will back here with another one, coming to you with a Friday and weekly market recap. Hopefully you guys had a very nice Thanksgiving with your friends and family, that you wrapped up a very nice week of trading in the markets, and that you're having a very nice weekend so far. Now, in terms of Friday's action, we can see that the bullish push continues. We are very close to being back to the all-time highs on the S&P. It seems as though just yesterday the market sentiment was very sour. The breadth was very weak. Extreme fear was felt in the market when this indicator read a 6, something not seen since the month of April. And there you go. In 5 days of trading, we've now recovered almost 3 weeks of losses, which leaves maybe more questions than answers, right? Is it still a good time to buy? The institutions were obviously on holidays last week and we had some low volume. Is this just a byproduct of institutions not being here to sell? And will we possibly have a bit of a decline on the Monday session? All very good questions, of course. And in today's video, we're going to explore exactly where we stand in the markets right now, what we have in terms of breadth, what we have in terms of market rotation, and of course, the age-old question, is it still a good time to buy? Or is right now, are we left behind in terms of this rally right now? And should we maybe hold off? So in today's video, we'll take a look at a few key things together. Number one, we're going to run you guys through a bit of statistics in terms of what just happened, why it matters, and why this move may just not be finished just yet. Thereafter, we will take a look at some of our technical indicators here, doing a full technical analysis rundown of our major market sectors, the SPY, the Qs, and some of our minor sectors. Take a look at the breadth, take a look at the rotation as well, and where we could possibly place some bets leading into the year-end rally, possibly. Thereafter, we'll do the same thing across our big tech names, because we know in the past couple weeks, big tech, a lot of these names got absolutely washed to the downside, which freed up some great technical entries. Now, those names over the course of last week have since bounced. However, are some of these names still in good trading zones for upside longs? And are some of these names still in great portfolio buys for long-term portfolios, right? Are they still in the good regions to lock in some, maybe end of the year buys for some DCAs for our long-term portfolios? After we're done that, we will take a look at the biggest gainers and losers of the week, taking a look at this list right here, the losers, the winners as of the Friday close, and determine whether or not there are other swing trades that we could possibly attempt in this market. And that'll be it for today, guys. So it should be very fun and maybe shorter video than usual. So let's get right into the action, shall we? So the S&P up about 0.5%, the Qs up 0.81%, very strong close to the week, and also not a bad close to the month. We'll be taking a look at the monthly candle closes in today's video because they do indeed matter a lot. Now, in terms of how we stand, in terms of the market breadth and rotation, it was indeed very strong. Take a look right here, another strong day of market breadth. Most of your big tech names did participate to the upside, only NVIDIA, Oracle, and maybe Google being a little bit left behind in terms of Friday's half-day rally. Financials, strong move off the lows. Healthcare, bit of a retracement because healthcare was one of our lead bulls, and now they might be getting a bit tired as that sector approaches its own all-time highs. And the bottom half of the market, great performance here by consumer defensives, industrials, and the bottom half of the market, real estate, utilities, etc. But one special shout out here is consumer cyclicals. Consumer cyclicals, and AKA consumer discretionary names, have been coming back. So we'll take a look at that sector as well over the course of the day today. On the one-day relative, you can see that even better to where Friday was a very broad day of performance, despite being a half day, despite being a day of low volume. It was indeed a very nice day of continuation, only healthcare being left a little bit behind. On the 1 week relative, well, after such a big bounce, all 4 trading days of the week, this is how we currently stand. All of your major sectors did indeed participate. Now, this is a big contrast, guys, in relation to what we saw just a few weeks ago, where market breadth was a very big concern. But as of right now, the 1 week stands pretty good. And on the 1 month relative, now that we're done the month of November, how do we stand, right? Only technology. Yes, still technology. One of the biggest loss leaders in the entire market, followed closely by consumer cyclicals, aka discretionaries, and industrials. So the rest of the market, though, performing quite well. Now, we brought this up earlier, but just to remind you guys, fear and greed is still at extreme fear. But this indicator right here is a measure of several different things, and a few of them right now are curling. Look at your market momentum right now in terms of the S&P 500 in relation to where it is versus the 125-day moving average. We are no longer moving down into it. We're moving away from this. This has shifted from extreme fear to neutral over the past week. Stock price strength, net new 52-week highs and lows on the New York Stock Exchange is still at extreme fear, but we can see it curling up ever so slightly. And stock price breadth, although we are not declining anymore, still stands in extreme fear territories as the market breadth is largely just starting. Now, it's good on a short-term basis. However, on a medium to longer term basis, it's still arguably not as strong as it was throughout the course of the summer. And put and call option ratio here, the average 5-day average put call ratio, is still somewhat elevated in relation to some of the lows that we saw prior to the start of the early November sell-off, late October highs, essentially, right? So still, people have bought insurance, and unfortunately, a lot of those people bought insurance at the absolute bottoms, right? So as we can see right now, volatility too is neutral. So a few of these indicators are starting to curl over, which is why even though we're close to the all-time highs, we are still, relatively speaking, in extreme fear territory. And I emphasize the word relatively speaking because all of these indicators are relative to where we stand in relation to prior times in the market, and some of them are still relatively weaker than where we were back in late September and even most of the month of October as well. Now, a few key things that came out over the course of this weekend and last week as we came into the holiday weekend, of course, is this one right here. Obviously, we know it was Black Friday, so what do we have in terms of statistics for Black Friday? Well, here you go. Adobe Analytics saying U.S. online Black Friday sales hit a record $11.8 billion, up 9.1% year over year, with another $5.5 billion expected Saturday, $5.9 billion Sunday, and Cyber Monday, $14.2 billion, which are respective records in their own aspects. MasterCard Spending Pulse showed total retail X autos were up 4.1% and e-commerce up 10.4% versus 2024. Salesforce pegs Black Friday spend at about $18 billion, up 3% year over year, with average prices up 7%. However, order volumes down on their measures by about 1%, pointing to higher spend driven more by price than units, at least per Salesforce, right? Still no indication about volumes from MasterCard nor Adobe Analytics, but still, right? If we look at this in overall broad terms, it was a very decent Black Friday. Obviously, if these numbers were hitting record lows of the past 5 years, well, that would be a very negative market impact. But I do believe on Monday, the market should probably respond well to some of these Black Friday sales details, right? We still have to hear from Amazon. Amazon usually publishes their Black Friday spending midway through next week. So we'll get to hear from a few other retailers into next week as well. Now, other statistics, right? You might remember this one to where the 2 Fridays ago when the markets dropped, this was this day right here, Thursday and Friday, right? Into the Friday session and into the following Monday, well, we had some hedge fund data. The hedge funds recording their 2 largest net day purchases of U.S. equities since May on November 21st and 24th, that Friday and Monday session. This was the biggest 2-day buying period over the last 2 years. And this is what it looks like, guys. Big institutional buy volume when all of retail was panicking and debating who's the better company, Google or NVIDIA. When everybody was panicking down here, who was buying? The institutions, as fear and greed read extreme fear at 6 when everybody was saying, this is it, this is the recession, this is a big market crash, look out, 20-30% below. And retail was panic selling and the timeline on Twitter was in shambles. The institutions were buying all of your panic sales overall. When people in the comment section were saying, that's it, I'm done, I'm taking my year-to-date gains and I'm running and I'll be back, we have more market clarity, the institutions were buying, and we can see that as well here in terms of your dumb money versus smart money confidence intervals right here. As you can see, big money tends to buy when retail panics, right? So we'll see a few indications of that. Number one is right here. This was the China tariff date. You notice what happened? Institutions right here, as the market was moving higher, institutions weren't loading up too much, right? As the China trade comes to happen, some get shaken out, but for the most part, a lot of them are buying, yeah? A lot of them are buying that dip. And as we continue to push through the month of October into weak market breadth, the institutions are kind of offloading some of those buys. Retail is still very bullish on the markets towards the all-time highs. And then you get a concoction of ingredients, of bearish market catalysts that we were bringing up on the channel, guys. We started talking about that here, literally all the way up there, yeah? And what we were saying was that there were some short-term bearish narratives at play. The AI bubble, that's when Michael Burry came out with his short, et cetera, et cetera, et cetera. We had the government shutdown ending and basically telling us that we were not going to have the October CPI data. That added to it. The technicals indeed were stretched as well. And the consumer stats was saying that everybody's dying, nobody is spending money anymore, essentially, right? and a whole host of other bearish narratives. And people also started talking about the yen carry trade and the Bitcoin impact, etc., etc., etc. All short-term bearish narratives, but people quickly forgot the bullish tailwinds at play. They very quickly forgot the fact that the Q3 earnings were excessively strong, over 80% of all companies beating revenue and EPS. We have strong GDP. We are also coming into a rate cutting environment and also having quantitative tightening. But those rate cuts were one of the reasons why we had the second leg of decline, the leg of decline right here in the markets, right? That was because when we ended the government shutdown and we said the October data was lost, and a few Fed members came in here and said, maybe we lack the clarity for a December rate cut. Your rate cut odds plummeted. You remember them plummeting, right? That led to leg of sell-off number 2. All short-term noise, in my humble opinion, and the institutions bought the hell out of it, guys. Again, we should always keep in mind this, right? Whenever everybody is panic selling or whatnot, around this dip, which was this dip right around here, yeah? This dip we just had, what were the institutions doing? They were buying, and they have bought. And what was retail doing? They sold off at the fastest pace since tariffs. Look at the velocity of sells from retail. And now desperately, towards the end of this chart, the last few days, retail is trying to say, oh no, maybe I sold too early. Maybe I should get back in type of stuff, right? So institutions versus retail, guys, always a classic story. Always a classic story, right? Especially when you are trying to make a determination. A lot of retail, right? They forget the long-term bullish tailwinds. They focus too much on these short-term bearish narratives. And I agree with you. Some of these take more than a few days to solve. But once you get a bit more clarity and the data starts turning around and you start getting some comments from Fed members coming into Mr. Williams' speech on the Friday session 2 Fridays ago, and then coming into Mr. Waller's speech on the Monday session as well, but you kind of got to take a hint, especially when you have these rate cut odds rallying higher, but also when you have big breadth indicators coming back into the market, which we did cover a good portion of last week, right? We noticed that at the fear lows, everything was terrible. Fear and greed was at a 6. The VIX at that point in time was moving into the higher 20s, which is usually always a buying opportunity for the markets overall. You were able to tell just by the average retail sentiment that people were getting very, very, very fearful over short-term things, focusing on things that most people don't actually understand, such as the depreciation cycle of GPUs, such as the discrepancies between TPUs and GPUs of NVIDIA versus Google, et cetera, et cetera, et cetera, focusing on the minutia, right? And not focusing on the broader market trends at play here. And that's very normal, guys, to get caught up in short-term sentiment overall. But at least I try to do my best on the channel to kind of paint the picture and tell you guys where we are at various points in a short-term cycle. So hopefully you guys are able to make some light of that. In other news, what we did have too is this one right here. You remember last week at the bottoms, I was showing you guys that this indicator right here and the McClellan Summation Index and other market breadth indicators were at extreme lows. Usually when you print these extreme lows, guys, it tends to be a short-term local bottom for the market, at least for that leg of selling. And now we have what you call the Zweig breadth thrust indicator. Basically means when you get way too oversold that not many people are willing to buy, and then in a very short amount of time, usually 10 calendar days or less, you go from big oversold, lack of breadth, to big market breadth. Usually that shift right there translates to very strong appreciation phases in the market. If you look back here, 2023, which was the early phase of the banking crisis, we were down here. We went from big negative market breadth to very positive market breadth very quickly. And then we kind of built upon the rally from there. If you take a look here at the end of 2023, which was the inflation fear concerns back then, a second wave of inflation, we went from very negative market breadth after 3 straight months of downside. Well, not consecutively, right? But overall downtrend for 3 months. Very weak market breadth, then very strong market breadth in a very short amount of time. And that was the bottom. The last one was during tariffs. We went from extreme weakness on the breadth indicators right here to very strong market breadth as the catalyst was removed. Basically, the tariff pause was put into effect, right? And thereafter, that started the nice bit of a rally. Now we are almost there. We are almost there. If this does continue, then that will mark a temporary bottom, and it can lead to a bit more upside, especially not only when you measure with this, but also everything else that we were just previously talking about, right? On Monday, we get a big liquidity event for the market, which is this one, the Federal Reserve ending quantitative tightening. That is December 1st on Monday. And as a result, we will be getting Jerome Powell speaking to the markets. This says 8 a.m. That is wrong. He will be doing it in the afternoon/evening, talking about the fact that they are ending quantitative tightening. Maybe he gives us some indication as to where the Fed stands on a rate cut for the December 10th meeting. I'd be surprised if he says too much, but maybe you get a few hints, kind of read between the lines, hints here and there. That's something to look out for overall. And additionally here, guys, right, just keep in mind that you have still some names, despite the fact that we have rallied a tremendous amount from the bottom. Not everything has come back. You'll notice this indicator right here. High quality stocks' underperformance is at 1999 extremes. This was measured November the 10th, but largely still is true for a lot of names. Now you might be wondering, what is the S&P quality index versus the average S&P? Well, it's a whole bunch of companies that you guys know very well. At the top of the mark right here in terms of this holding, right? The high quality stocks S&P quality index, right? Well, if you're noticing, Apple's number one, sure, but you got a lot of other companies like GE, which has come down recently, MasterCard, Visa, which we've literally been bringing up almost every single video over the past few weeks. The fact that they're lagging behind the overall indexes, Visa, MasterCard, I keep saying it, right? Then you also have other names like Procter & Gamble, names like Costco. Costco as well has done nothing for a better part of the last, 4 or 5 months, just consolidation on Costco as well. And if you take a look here, sure, some names are printing the highs like Caterpillar, other names are mid-recovery cycle like Merck, but you have a whole lot of very solid companies here that have not been doing much of anything whatsoever in the past few months. And we've been focusing on that, saying a lot of the quality companies in this market have indeed been left behind, and that may be a very nice area to possibly position for some of these names that otherwise track the S&P very closely, but that have since got left behind because of everybody's focus on the AI trade. Speaking about the AI trade, are all the AI names now back towards the highs? Is there nothing left to bid? Well, no. If you take a look, I showed you this chart back here on Wednesday. This is the good old Google versus NVIDIA. Google complex versus OpenAI complex. That has been the topic of discussion for people over the past week and a half, 2 weeks, arguably, right? The Google complex has performed very well since the mid part of November. Google, Broadcom, Celestica, Lumentum, TTM Technologies, all performing very well as part of the Google complex trade. And the OpenAI complex trade, as people question whether or not OpenAI actually has the money to fund all of its deals, and whether people still question whether or not NVIDIA's GPUs will still be used or tossed to the side because everybody is suddenly going to pivot to Google. We kind of debunked that last Wednesday, so keep that in mind. SoftBank, Oracle, NVIDIA, Microsoft, and CoreWeave all moving progressively lower as they are part of the OpenAI trade, right? Now, that being said, a chart that usually is very correlated that breaks and diverges for short-term concerns and short-term narratives usually tends to correct back in terms of the longer term correlation. So keep that in mind, right? Maybe a lot of these names in the Google complex are slightly overbought. And if you are buying them right now, you might be chasing. But if you are still a firm believer in the longevity of some of the companies down here, specifically the ones that I'm looking at, NVIDIA, AMD, and Microsoft, which all have very strong growth prospects, which were reiterated through their earnings in the past few weeks. If they have very strong growth prospects through next year, through 2027, well, maybe it might be time to play some of these lagging names as opposed to chasing some of the more favorable names that are coming into overbought conditions. Just a thought. So whether it's the quality names or even some of the AI and tech names, there is still many opportunities left in this market, in my humble opinion, despite the fact that we are off of the most recent lows. So that's everything for your overall market introduction, some statistics, and where we currently stand. Hopefully you guys enjoyed that. Now, looking into the actual technical side of things, let's move into the SPY really quickly, and we will once again be covering the monthly candle closes. So we know that we were in a daily downtrend here on the S&P, and now we have a beautiful engulfing move, reclaiming some of the moving averages. But I know what some of you guys must be saying, well, they left some gaps behind here, and it was a bit of a holiday week without much volume. This is true, but the trend from the bears is now broken. The bulls have a over 100% engulfing move, creating a ton of space off the lows, right? Anything above 650 is going to be looking for a higher low. We've reclaimed the EMAs. We've reclaimed a major area in the market's previous resistance, support, and then choppy price action with EMAs. This area is 674 down to 666. We are also curling over on the daily MACD, which has been negative for the past month worth of trade. Couple that with the fact that you have very strong market breadth. Take a look. It's not only big tech leading this rally. It is everything. Look at the percentage of stocks below or above their 20-day moving average. We went from a very low read of 28, where I was saying on the channel that it was a very nice buying opportunity. Now we are back to 68% of all stocks. That is your thrust, the breadth thrust, right? You're seeing it now from the percentage of stocks, all the stocks in the S&P above their 20-day moving average, now back to 68. Can it carry a little bit further? Yes, but if it does carry a little bit further, guys, that may mark a local top. Here's how you can kind of reconcile these two things, right? It might mark a local top, but because we've created a lot of space and we've undone the downtrend, maybe that's just for a higher low for further trend continuation, right? Because although the short-term momentum is very strong, short-term breadth is very strong, right? The percentage of stocks above their 50-day moving average still needs some improvement. So if the short-term breadth continues, right, and then we have a bit of a pullback on the SPY, the result can still be an overall uptrend because you got a lot of space here on the percentage of stocks above their 50-day moving average. Only 52% of all stocks are above their 50-day EMA. We still have a long way to go to get back to some of the bullish momentum that we saw broad market style back in July through September. So we still got a lot of room right here, right? Moving on further, percentage of stocks above their 200-day EMA, that has always been relatively healthy, right? We had a pullback here through November. This is true, but it's not as if we went down here to 40 to 30 where we were during the massive tariff sell-off when there was actual structural fear in the markets, right? So that being said, this can also see some further improvement. But one thing is for sure, momentum has shifted from bearish to bullish. And that's because one key piece of uncertainty has been lifted in the markets, guys, and that was the rate cut odds for December. There are still some concerns, obviously, surrounding the AI trade. Those have not gone away, and you see it best through this chart right here. They have not gone away, right? People are piling into the favored stuff while leaving behind some of the unfavorable stuff for the short-term narratives. They're forgetting all the capital that's committed so far. They're forgetting the Q3 tech earnings that we just had, obviously. So for sure, there are still some, dualities here in the AI trade. Some people believe in it. Some people think it's overdone. Some people think we're in a bubble. Some people think we don't. So this market strength did not come from resolving those sentiment issues from AI. No. What happened was we resolved some of the issues surrounding the rate cut odds. That is what the market truly wanted. And now that the market has that back again, it was able to quickly buy this dip. If it would only be AI resolved and not the rate cuts, it would have been the opposite. You still would have had a very concentrated market and maybe only the AI names would have ran, such as where we saw in September and October. It was largely an AI narrative driven market and everything else was left behind, right? Now, some of the AI names still struggle. Others are doing okay, but now it's the broad market. And when you see it, the broad market, it's because something broad happened in the macro that changed. Now, this week in the markets could be somewhat volatile as well. Keep in mind, in terms of the week in front of us, we have Powell coming in speaking to us about that quantitative tightening coming to an end on Monday evening, essentially. In the morning, though, we get manufacturing PMI, something to watch. Wednesday, we get the ADP employment change, also something to watch because we know there's some concerns surrounding the jobs market right now. Additionally, that same day, we get ISM services. These two indicators, PMI, manufacturing, and services, have been somewhat soft recently. If they come in too soft, that's going to be some criteria for the market possibly pulling back. On Thursday, we get another challenger jobs report. That could also be a volatility event for the markets overall. And if ever jobs are not the best with challenger, remember what happened a few weeks ago at this point in time, right? It was a red day in the market when they reported this roughly a month ago at this point. And then on Friday, you get the good old PCE and core PCE to show us where inflation currently stands for the Fed's preferred metric. So do we have some volatility events this week? Yes, we do. Do we have enough to be able to unwind this entire rally right here? Arguably not, right? Because the market wants rate cuts. As long as jobs aren't falling off a cliff, if the jobs reports come in softer, not extremely soft, but soft, right? Then you can expect this rate cut odd to go all the way up maybe to 100%, right? You got a liquidity event, quantitative tightening coming to an end. So that being said, guys, I don't think we're going to see anything crazy from the inflation front because let's be honest, Trueflation indicators right here are currently at 2.44%. This indicator measures 15 million products on a daily basis, refreshed, right? So inflation's not a problem. The jobs could possibly be a problem. So if inflation's not a problem and the jobs are a bit of a problem, well, the Fed's going to cut rates come December 10th. There's no way around it. And as a result, we may be able to retrace some of these gains with some volatility, fill some of these gaps, right? But as I said, the technicals are looking pretty good. And in terms of the weekly as well, right? We know that we had a bit of a slip up in terms of the weekly timeframes right here. It was a nice weekly uptrend overall, and then we almost gave back the entire move. Didn't close down there, but came very close to the double bottom right there. We kind of unraveled some of our weekly MACD momentum, and now in just one single week, we've reclaimed over 80% of that retracement. Over 80%. Claiming back an 80% retracement in one flush like this is not an easy thing to do. The bulls will definitely have something to say about it, especially if it's a broad market rally. It is much more difficult to unwind this than it is to only unwind a few big tech names if the market was only being led by big tech. So keep that in mind. In terms of your monthly candle close, the month of November was definitely very bumpy, but look where we closed, guys. We closed at the highs. So could we get maybe a bit more follow through early December into here? Yeah. But if we would have closed at the lows for the month of November, then you would say, okay, the likelihood of follow through down to the 12 is very probable, right? Now that they've engulfed and retraced all of this move, the likelihood of further market continuation, either straight up or after a subsequent early December dip this week, is very, very high at this point in time, meaning the bulls are still in control of the daily, of the weekly and monthly timeframes. It's just the daily that they've been trying to get back here over the past week after about a month's worth of damage. So hopefully all that analysis kind of makes sense to kind of tie in the statistics, the market breadth, the narratives, the sentiment, and the price action at the same time, because you guys know, I always say it, man, the market's a big giant puzzle. It is up to you to put together the pieces of those puzzles, or of that puzzle, to try and make the best possible decision rather than getting carried away with narratives, right? Never think in extremes and never think in absolutes. Never say the market is 100% going down this week. Never say the market is 100% going up this week. Structure a trading plan. If you're trading, trade with a stop loss, right? Have some trade ideas, have a thesis, and have an invalidation level for that thesis, right? If you're a long-term investor, the recipe has always been so simple. I say it every single week in the markets, right? When you see some phenomenal discounts, either in your favorite ETFs or in your favorite names that you might have in an individual portfolio, 10-15% of your paychecks, guys, should go in every 2 weeks when you get paid to DCA into the markets. It's fine to hold a bit of cash if you're waiting for drawdowns during a drawdown cycle, right? But eventually, when things kind of come to a climax, right? Sentiment, price action, big declines on some of the big tech names, and you've been waiting for it, you may as well throw out a little nibble there when the VIX is close to 30, when sentiment on the fear and greed is absolutely abysmal as well, right? When market breadth is abysmal, and when the timeline is in shambles, people are just saying it's the end, it's over, it's over. Maybe that's kind of when you want to DCA and nibble a little bit for your long-term portfolios. Just a thought, right? When would you rather do it? When we're all the way up here? Because it makes you feel better? Because everything's green? Probably not, right? So you guys will have to kind of learn to be able to buy some of these narratives, because it's never easy. If you guys think that we're just going to get a random 5-10% pullback on the S&P and that everything's just going to be fine and rosy and it's only going to be a technical pullback, like nobody knows what's happening, but for some reason the SPY pulls back 5-10%, but the economy's good, the jobs are good, inflation is good, everything is perfect, Trump isn't tweeting anything. If you guys think you're going to get a free pullback like that, it's just not going to happen. Every time you get a big pullback in the indexes, it's because there's something happening. It's up to you to piece together the puzzle to determine whether or not these are structural long-term issues or whether they are short-term bearish narratives. It happens every single time, right? And that's what you kind of have to practice. You know, trading and investing up here is very easy. When you actually get a 5-10% pullback on the indexes, that's where you really learn, like, are you able to piece together the puzzle in an adequate fashion to where you feel comfortable buying and you have conviction buying some of your favorite companies because you're relying on their long-term fundamentals, right? Moving on to the QQQs right now. QQQs, same concept, 0.81% up on the Friday. Daily downtrend was clear as day right there. And now look, over 100% engulfing move. Reclaiming the moving averages. Moving averages also crossing, something we have not had since the early stages of the month of November. Over 100% engulfing move gives the bulls a very good chance at, they've created off space off the lows here, 581 to reset a daily uptrend. It doesn't mean you have to keep moonshotting, right? No, they can do it in 2 steps. They can do something like this. The EMAs are right there. Support's right there as well. 613 on a 605. They have a ton of space to reset this daily uptrend overall if they so choose to do it from here. If not, if they want to continue a bit more, that gives you even better probabilities of setting up for a trend change, right? That being said, MACD momentum is also crossing after a month down there being very bearish. That is very notable to me as well. The weekly time frame close is also very, very strong coming out of last week. The bulls never lost the weekly time frames in spite of the bears' best efforts to flush these lows. We never closed below these lows. So although they were challenged, arguably they were not lost, right? That being said, we can continue this weekly uptrend, or if we have to do it in a couple steps, no problem at all. The bulls are creating some nice space off these lows already to do it. That being said, on the monthly time frame, look at this monthly candle close. You close this one near the lows of November, and then continuation could be highly likely. If you close it like this and recapture everything, well, maybe that was the dip, and maybe you can keep going for a little bit longer into the December seasonality, right? But be very picky for your buys. Not every company in the QQQ is a buy up here, not even close, but there are still some very strong companies at buy levels or around buy levels that we will discuss later on in the video. Moving on to the XLF financials right now, nice broadening out of the market, including financials right now. Sweeping daily, right? Now we have the high, the lows, equal lows, and now the higher high. New daily uptrend on financials. They are challenging resistance, couldn't really close above it. 53.30 down about 53. That's a big level. Previous resistance, previous support, previous resistance a few times for this market, and now again. So in the event we pull back, are we going possibly for a lower low? We can't say that, right? All we know is it's a very nice daily uptrend with a lot of space, anything above 51.11 looking for a higher low. We're above the EMAs right now. Huge support here on the higher time frames. Look at the weekly. It's been a big area for the bulls, man. Previous resistance, they've defended this one since June, right? Not anything small. And in terms of the monthly as well, we're currently defending it nicely. We've always been looking for a monthly higher low into the 12 EMA into our support area. So it's looking pretty good. What is one thing that financials really appreciate? It is rate cuts, right? So that being said, financials could do well, but I'll remind you, not all financials are built the same. A lot of these banks are somewhat extended on their monthly timeframes. Although we've pulled back on JP Morgan a bit, we are still somewhat elevated. This one, Goldman Sachs, Morgan Stanley, they are close to all-time highs. So is it good to chase these, or might we want to position in some of the high-quality financials that have been left behind, such as Visa, such as MasterCard, such as SPGI, such as Moody's Corporation? There are names all over the place within the financial segment that are not the banks, right? So kind of play the strengths and try to pivot towards names that haven't ran as much, and you just do that big old rotation trade, right? Moving into XLV. XLV Healthcare, very strong, but you know, the bulls might be getting a bit tired. We are daily overbought conditions. This is true. We are coming into a previous all-time high, getting rejected once, and we know that the weekly also is somewhat extended from the EMAs. So we wouldn't be surprised, right? Healthcare has been carrying the S&P throughout the entire month of November when everything else was getting crushed. XLV Healthcare was kind of there to save the day a little bit or stop the bleeding. Now the higher lows are down here, 151. So any retracement now looking for a new higher low, possibly for further trend continuation. But if you unwind this into a downtrend, don't be surprised if that is weekly consolidation. Very natural, something that we talked about previously when this happened on semiconductors, right? Things can only run extended for so long before they have a pullback. But the goal is to determine, is it a healthy pullback? Well, I would argue that this indeed would be a healthy pullback. Look how far we've ran. If you do pull back a little bit more on the weekly, we'll see where we end up, but it could be a nice thing to cool off some of the short-term time frames, give the healthcare bulls a little bit of rest now that they've been carrying, and reevaluate some trades if we make our way into a lower section down there. The monthly time frame, though, very strong, so you can't say that the pullback is necessarily coming from here, right? We're watching it, but the monthly is very strong. Look, monthly MACD cross. Since when? Since a whole year, the MACD was negative. So this can continue, but it doesn't mean it needs to go in a straight line, right? We can have an early retracement in the month of December or into January, and this MACD will still be crossing because it's a relative measure of momentum from back here carried into now. Moving on to the semiconductor trade right now. So semiconductors, obviously, guys, I can't explain all the concepts in one video like this, but if I keep talking about the concepts every single video, eventually you guys will be able to piece together, the puzzle on your own. That's kind of my goal, right? So daily downtrend, right? Now we know, nice engulfing move on semiconductors, over 100% retracement, recapturing some of the EMAs and recapturing this little area that I used to have marked on the charts, but for some reason it got erased. This little whole area, you want to move the chart and move the bar down a little bit, no problem at all, so long as you understand what's at play here. Yeah, daily MACD is also crossing, not too bad after a month of being bearish. You couple that with the EMA recapture, the fact that we're above support right now, 343 down to 326, right? And you might just end up with a nice location that if the bulls get tired here and have to retest, You might just be looking for the higher low, daily uptrend shift, and now possibly weekly momentum continuation. Weekly candle close, very bullish, came down into the 12, perfectly tested it, right? We were looking for the weekly higher low. They came down, resetting now, looking to move a little bit higher perhaps, and the monthly candle close like this, not at the lows, like this, right? Shows that there's still a lot of strength. Now, it did not fully come down into our 12 EMA for an index trade, right? However, some names within semiconductors are still relatively soft, right? Some names have pulled back more than others. So it's our job to kind of find those names instead of piling on to the names that haven't pulled back much, getting some of the names, maybe high quality companies that have pulled back quite a bit during this whole thing, yeah? Moving on to the Russell right now. The Russell, not too bad, up 0.59% on the Friday session. So nice engulfing move. Daily downtrend again, yeah? Huge engulfing move. It's not going to be easy for the bears to do this, is it? Not with that big of an engulfing move, right? Not in 5 days. That being said, tons of space off the lows, 229, let's say. If we get a bit of a retracement here, you're looking for a higher low. And what better area to do it in than an area that the bulls have played defense in a few times over the past few months? Big support, resistance when we try to move into it. Now, big push through here. If you get a higher low, you might be looking down into there. That is 240 down to about 237. The weekly time frame not looking too bad. So we did lose the weekly time frame temporarily here. We did close below this area, which is not the same as the Qs, right? Now the bulls need to get it back. Eventually, they will have to set the higher low and go for the higher highs. We will seek to understand where that higher low is going to be. If they do it this week, perfect. Maybe we can analyze for a reentry opportunity down here, right? If they move significantly higher off this one move and reset it up here, no problem. Maybe we can reevaluate some breakout retest trades right there. But for now, this one is a little bit extended, so I'm not really looking to position in the Russell personally. And the monthly candle close, look where the Russell closed. At the high of the candle, which leads you to believe that throughout December, we could have some continuation. Does that mean we get weakness in December, creating another tail like this, back test, and then close at the highs just like November? Maybe. Does it mean like we just blast off here all throughout December and never look back? Maybe as well, right? But one thing's for sure, I want to trade with confirmation. So if you don't give me a confirmation signal, then I'm probably going to be out of a trade. But it's fine. Don't worry about me, man. I have tons of trades on the table right now. I'm just giving you guys the premise of how you should approach all this stuff when looking at it in totality, right? Moving on to XLP. This is consumer defenses. We were talking about defensives being a nice opportunity down here. It was lagging the market. 2 years worth of resistance, a year worth of support, and back testing as support again. That being said, on the daily, strong daily uptrend breakout move here into resistance right now, 79.50 up to 80.51. I would not be surprised, right, if we are going to create so much space here that the result becomes a new weekly uptrend eventually, and possibly a shift in the monthly, right? Possibly looking to revisit some of these all-time highs. Consumer defensives have been lagging behind the market. Let's call it for what it is, right? All year, this sector has done nothing. Concerns surrounding tariffs, concerns surrounding consumer spending, concerns around some of these companies' pricing power, essentially, right? Concerns. But eventually, this one will join the rest of the market overall if we get, if we can kind of, just get away from some of those concerns. But I agree, man. Consumer discretionary spending being soft and the jobs market being soft, they're not easy to get away from, which is why this thesis is, right, hinges on the no recession thesis trade, yeah? It's a good trading opportunity. If there is a no recession scenario, if we do get the Goldilocks soft landing scenario as well, this will perform quite well. The risk to reward is quite good on this trade because the valuations are currently crushed. Moving on to this one, which I really want to bring your attention to. This is consumer retail. The reason that I use XRT instead of XLY, right, is quite simply because if you look at the normal consumer discretionary, right, XLY, this is literally like 15-20% Amazon and equal amounts of Tesla. So it doesn't really give a good indication of all companies. If you'll notice here, consumer discretionary, it seems as though there's no problem. We're close to the all-time highs, yeah? Well, if you look at the allocation of XLY, which is what most people use for consumer discretionary, right? It's just not adequate. XRT presents a better view because, the highest weighting in there is like 1.5%, 2%, and everything else is kind of somewhat equally weighted. It's a more balanced view of all the consumer discretionary names. Look at this. Breakout retest, possibly run, right? Not too bad. So although consumer discretionary is not my favorite trade, it is a longer thesis trade. If you're looking for this monthly chart to expand, it's probably not going to do this. This was COVID, free stimulus money, right? But if we're looking for the expansion into 2026, slow expansion, recovery of some of your favorite restaurant themes, recovery of some of your favorite apparel themes, such as Nike, things like that, right? If you're looking for the recovery, well, it's not that bad now that market breadth is coming back into the markets. But I mean, this would still be a lighter position. The favorable narrative right now is still tech and AI. So that's where most of my capital is going to be focused. But am I opposed to building very small positions in some of our consumer discretionary names that have gotten crushed over the past year, 2 years? No, but just keep in mind, right? You're not looking for this. You're looking for the slow and continual expansion, right? As institutions slowly start repositioning in these names for the potential of a no recession scenario, yeah? So keep that in mind when you're looking at consumer discretionary, right? A lot of names have good risk to reward, but it does not mean that there's no risk. The trade that has the least risk, arguably, is tech. Moving on to utilities right now. So utilities, 0.71% to the upside. Very nice daily downtrend right there, yeah? Moving higher a little bit, engulfing move, looking to maybe reset the trend. Overall, the weeklies, I mean, clear as day, right? We talked about this for a long time. These pullbacks into the 12 EMA were money for buying on some of our favorite utilities names, potentially the energy names associated closely with the data centers. And lastly, look at this monthly expansion, right? Closing the month at the high of the candle. So although we may have wanted a bit more, they did not give it to us, right? This monthly is still in full expansion mode. Nice monthly high or low. This little area was a nice location to be picking up some of our favorite names. We talked about it a lot, right? This bull flag on NEE, looking maybe to break out. This beautiful breakout retest on Duke Energy, maybe looking to break out. This beautiful breakout retest on the monthly time frame on Vistra, maybe looking to follow through a little bit. Keep in mind, all those trades, guys, are kind of like multi-quarter, multi-year trades. But it's nice that we can find them at some of the more recent weekly and monthly sell-offs overall. So keep that in mind for utilities, still looking very strong overall. And lastly, utilities, I mean, real estate, utilities is going to get twice. Real estate also, right? Real estate got crushed. Why? Of course, because the rate cut odds, right? Now that the rate cut odds are back higher, well, the real estate trade is gaining a bit of momentum. You can only look at Rocket Mortgage for indication of that. Rocket Mortgage, we brought it up so many times over the past month, looking for the monthly higher lows, selling puts down here or buying a few more shares. It was a very profitable endeavor. Hopefully you guys caught that one. Home builders, we talked about this for a while. The good old breakout retests of support. We were in there for a while. Maybe you guys got a piece of that. Maybe not. Just something to kind of pay attention to for the expansion into 2026 through the furtherance of the rate cutting cycle. But overall real estate, even XLRE, which is a bunch of REITs, some of the home builders, mortgage companies, it's a more broad ETF. This one's still maybe poised for a bit of expansion. It's not going to be a fast trade, but not the worst idea moving into a rate cutting cycle. But this trade as well hinges on no recession and the progressive recapture of essentially just buying power from the consumer, right? Willing to deploy capital or take on loans when the cost of capital goes down. So I spend a lot more time, you see, on these weekend recap videos because I can afford to, because midway throughout the week, I know you guys are busy. I know you guys may have careers or businesses to run. So I try to keep the videos a bit shorter and keep my explanations a bit shorter. But now with the monthly candle closes, and also just summarizing the narratives and how everything kind of intertwines, well, hopefully you guys are able to kind of build a thesis for every single segment of this market and how you would structure an invalidation point for that thesis, et cetera, et cetera, et cetera. Moving on to the VIX right now. The VIX down tremendously, right? Can we have a resurgence of the VIX right here? Maybe, but is it going to go back to 26 without the same fear catalysts? No, right? You're going to need the rate cut odds to somehow plummet if you want to make your way back up to the mid-20s. So are stocks still a buy? Well, not broadly speaking anymore, but can now see back here, it was broadly speaking, right? There was so many plays that were very juicy. Now, there are still some plays that are very juicy, but if you start chasing everything, some names have bounced a lot recently, right? So maybe it's not a chase everything market, but we can still afford to be selling some put options on some names that haven't rallied far enough, or still build some names in our long-term portfolios that haven't rallied enough. However, right, always keep in mind, guys, this should be a lesson to you, yeah? When the VIX comes into the mid-20s, we can't really be expecting tariffs, you know, and Japanese carry trade every single time, can we? No. More often than not, this is pretty much where we stop. So should we be building positions as we move into there? Yes. And I keep saying it, use short puts to your advantage. Lock in the volatility with a lot of time, lock in the levels with a lot of time, and you might just be rewarded, right? In terms of price action, or rather prices that you want to lock in on some of your favorite companies. when the VIX is a bit lower right now, then we can kind of target companies that have been left behind, maybe with some leap call contracts if they're high quality companies. Leaps are not a shotgun approach, right? You shouldn't just buy leaps on absolutely everything that you come across. No. You should be very tactical with how you use your leaps on very specific companies that you have high conviction on that you may want to hold for the next year and a half, 2 years, leap call contracts, yeah? Moving a bit further along our list here of trades onto gold right now. Gold had a very nice expansion, right? So gold just looking to kind of continue this breakout that they started. We had the daily uptrend, the breakout, the retest, and gold, instead of just doing it in one smooth move, they took a two-step process, right? But the weekly time frame shows a bit more clarity here to where we got the pullback, nice weekly higher lows are set. And now, although these candles are very ugly, a lot of inside bars, right? We are just looking for the continuation of this weekly expansion overall. It's not looking too bad. I know these candles can cause a bit of confusion, but if you just look at the average prices, right, it'll show you a bit better momentum, but I agree that it's a bit choppy overall. But you know, you do have a very nice breakout here on gold. The monthly time frame is still very extended right now, monthly overbought conditions. So at this current stage, guys, it's very late to start a gold trade. I'm not going to say not to do it. I'm just telling you, man, you're super late, right? We talked about this trade all over around here with the stop loss below there, because that's the invalidation point. That would be the weekly downtrend. That would be the monthly consolidation for gold. Now it's a little bit late. If you guys still want to do it, it's up to you. I'm in from down here. I don't know where you guys would possibly be in for, but you know, the risk at this point would have to be a stop loss below these guys. And the take profit would be the all-time highs / 4,500 psychological, or push it out to 5,000 if you really want to be that risk on type of thing. But gold is looking pretty good across most time frames, except for the fact that you're still battling with monthly overbought conditions, right? This is the time frame that gives me a bit of pause in terms of the follow through for gold. So we'll see what happens. Maybe we just devolve into some form of awkward trading range here as we can't eclipse the highs and we just come into something like this. I don't know. Gold looks good for now, but that's why you got to manage the risk with a stop loss and define take profit targets on this trade. I wouldn't say it's as easy as it was back here during the crazy moment of expansion. Moving on to some of the crypto names right now. So Bitcoin over the Friday session, right? Nothing too major. Saturday as well. We clipped it on 93. We're back to 90. But overall, guys, has anything really happened here? No, right? This week on Bitcoin was pretty good, but the bounce size is still relatively weak. So if this is where we stop on the bounce and we start trending lower on this daily, yeah, I'll remind you, what's the size of this bounce? Not even a 50% bounce. Not good enough. You do not guarantee that the bulls will be able to set the higher lows and go for the higher highs. You would like to believe that that's the case, but I mean, until they put in a bit more, I want to see a 50. If you want to tell me, if you want to show me true strength here, we'll see what happens on Monday with the end of quantitative tightening, right? But give me an over close 50% bounce or a 618 bounce. Give me a strong bounce, reclaim this entire support range, 94 down to 88, and then we can talk about, all right, yeah, maybe we can establish a swing trade on a back test here with a stop loss below the low and then target weekly expansion trades back to some of the all-time high regions, yeah? As of right now, the price action is still somewhat unclear and very choppy on Bitcoin, so I need to see that daily uptrend confirmation to let me know, all right, the weekly lows are probably set right now. Maybe I can trade cautiously with that level as a tradable bottom, and maybe indeed we have set some of the monthly lows just yet. As of right now, no swing trades for me, but longer term positions, the risk reward is definitely better. And the same thing can be said across Ethereum as well, right? We need the daily uptrend because this bounce size right now is just too soft, right? Not even a 50% bounce of a retracement on Ethereum. So can we clearly say, yeah, the bottom is in, I'm going to go full YOLO send long here? No, you don't have confirmation. If you do want to do that, best of luck. You should put a stop loss below here probably, but you're free to do what you want, right? Weekly is still a massive weekly downtrend, and the monthly is still a very large retracement size. Arguably, they blew through where you would have wanted them to, which is stopped between the 50 and 618. They took back a little bit too much. Now, we are still holding relevant support as of right now, with the monthly candle close coming tomorrow on crypto, yeah? 32 down about 2,800. So it's still a good long-term area, but are we guaranteed that Ethereum is just going to do this by the end of the year? No, you're going to need a lot of risk on sentiment for that to happen, right? But who knows? Maybe if we can kind of start these daily uptrends, maybe it's a start, and then we can look, all right, they got the daily back. How much of this weekly can they get back before doing this? In my opinion, instead of being like this, it might just be a bit of a longer duration recapture of this uptrend if it is to happen. So keep that in mind. Still a fan of Ethereum. Long term, but short term, it may continue to be a little bit choppy in these markets. And that's everything for your overall market rundown. Spent a lot more time on it than usual, but just to give you guys a sense of guidance, because I'm sure a lot of people who didn't want to buy down here, then you get upset with a crazy rally, right? Now you're like, well, shit, like I'm all the way back up here. Can I buy it? You know what I mean? So I kind of want to just reconcile everything, because I'm sure a lot of people think in extremes, right? You just don't want to buy here. And then when it's up here, you got a lot of anchoring bias. You say, well, I can't buy it here. It was down here and I didn't buy, right? All these different emotions, all these different biases or biases that you would have in your mind, right? It's time to break it down, break down the puzzle into its respective parts, understand what's happening, which bearish catalysts were removed, which are still in place, which bullish tailwinds are here, which are still in place. And I know I just swore for the first time in a YouTube video. It is what it is, man. But hey, you just got to be raw with it sometimes, right? All right, so moving into our big tech names, shall we? So moving on to good old Apple. So Apple right now up 0.47% on the Friday session. Apple still in a very strong daily uptrend, but still somewhat overbought. Yeah, daily almost overbought conditions. Strong daily uptrend. Higher lows are here, 265. Any pullback will be looking for a higher low, possibly into the daily 12 MA, possibly into all of this price action right down here. And you would just be looking for continuation in the event that you get some rotation, because we know recently a few stocks have been very hot in big tech. A few stocks have not been very hot, right? That's kind of a flip. Apple and Google were some of the worst performers earlier on in the year. Now they're some of the best performers. Maybe there's going to be a rotation shift here. So would I be looking to ride Apple's momentum and ride Google's momentum a bit further? Probably not. Would I be rotating out of Apple and Google, maybe into some of these names in a trading portfolio? Maybe yes, because the risk to reward makes more sense. It doesn't really make sense up here in terms of risk to reward, right? You're extended from the 12, you know, you're almost weekly overbought conditions, extended on the daily, and look at the monthly. The monthly is also very extended. We want to be buying Apple down here for position trades or long duration swing trades, right? Maybe not all the way up here. Can it keep going up? Sure, everything can keep going up, but it's about risk to reward, right? So if we're trying to play the Apple breakout right here, can we please trade with a stop loss? Because if we don't and we get invalidated, that is weekly consolidation and may bring us down to the 265, down to about 255 region, which would not be so awkward in terms of a monthly pullback cycle for Apple, even though they will probably have a good Q4. The technicals are slightly extended. The fundamentals are slightly extended, and I'm just not in the business of buying things when they're slightly extended. I will hold my long-term portfolio Apple shares, but I will not add to my long-term portfolio shares. But if we have a nice monthly retracement, maybe you will find me doing one of the two, trading or possibly long-term portfolio. Moving on to AMD right now, this is one that had a very nice pullback, and people casually forgot about what was said during the earnings, casually forgot about what Lisa Su said right here to make the stock go up 9%, which was forward guidance, casually forgot about the long-term thesis of AMD, right? And only got caught up in the short-term narrative. They forgot about this EPS push. They forgot about the revenue push. Not you guys, because you guys are locked in with this stuff, right? But a lot of people did. That being said, daily uptrend recapture right there. MACD looks like it wants to start to curl over, right? Nice new daily uptrend. Higher lows are now here, 194.50. So we will see, now that they have the daily uptrend, right? This is more than likely a lower weekly higher low. That being said, nice move here by the bulls. They did not fully fill, right, this price action area down to 180. That's fine. We were selling short puts down here while it was consolidating, while volatility was very high. It's done a nice job of cooling down the weekly RSI as well. So even if we do come into a bit of a chop zone right here, is the long-term thesis of AMD still alive? Yes, absolutely. Is it still a decent buy around 200s? Absolutely, right? Here's where the fundamentals at a low 30s multiple, a one peg, here's where the fundamentals still make sense for some long-term buys. If AMD curls down a little bit further, would I be opposed to selling some put options down here? No, right? So that being said, AMD doesn't look too bad. Am I saying that AMD is just going to rocket up from here? No, maybe, but while it still is down here, is it good to DCA for some shares? Sure. Is it still a good risk reward opportunity for long duration leap call options like December 2027? Possibly as well, because the long-term thesis does support that overall, and the price action has pulled back decently from the highs. Monthly candle close, not too bad as well. Could we get a bit of a retracement down here early December and then make more momentum, or rather early December, get a bit of a tail and then start closing up into the highs end of December? Yeah, and I think that could be a very likely scenario for AMD. Moving on to Amazon right now. Amazon up 1.77% overall. Now, keep in mind, right, daily downtrend was very pronounced. We came down a ton on Amazon. Not daily oversold conditions, but we did come down an absolute ton. We backtested the 200-day EMA down here. Support was 218 down to 210. And now we're coming into resistance, 240 down to about 230, right? So take a look at the retracement size right now. This is a 50% retracement. If the bulls get stopped up here, plus resistance, well, then maybe we'll have to revisit a little bit of these lows. But at the same time, right, would I be looking for two things? Either, right, long-term shares in the low 220s. Well, the answer is yes. You only need to look to the fundamentals for that, yeah? Trading around 220, it's a 28 forward price to earnings ratio and a 1.4 peg. Very decent in light of their earnings that they just showed to us, right? That people may have forgotten just because of how quickly we came down. That being said, would I be opposed to adding long-term shares here? No. If you get a bit of a retracement down, would I be opposed to selling some short puts down here? No. Around this big support area, around the 12 EMA, not at all. So Amazon is a nice short put trade for me, and in addition for some long-term shares, because eventually we won't be able to play Amazon anymore, right? Eventually Amazon will have its glory days, just like Google did, just like Apple did, and it's going to pull away. And when it pulls away, we won't be able to do anything. Arguably not add to the long-term portfolio, arguably not do it for any, short put opportunities, or maybe some longer duration call option opportunities either. Moving on to Google right now, same thing as Apple, right? Google is super extended. Back here, nobody wanted Google. Now, everybody wants Google, right? So when you see that coming, and especially if you're trading, well, maybe it's time to take a few chips off the table, especially if you have call options that are up a ton right now. Daily overbought conditions, right? That being said, a lot of space. Anything above 272, looking for a daily higher low, maybe for trend continuation. However, if we unwind this daily downtrend, because we know that the weekly is overbought right now and very extended, if we unwind this a bit further, it's going to be a very nice, healthy retracement on Google. The weekly is extended. The monthly is extended at the same time as well, right? And now Google is no longer as cheap as it once was. Objectively speaking, is it expensive? Not that much, right? At 320, it's still under a 34 price to earnings, a 1.9 peg. But is it as cheap as some of the other Mag 7 companies that are in this market right now? No. So valuation has crept up on us. The technicals are clearly very extended. So am I looking to open a position up here on Google? No. Fantastic company. Am I selling any of my long-term shares that I plan to keep for the next 5-10 years? No. In my long-term portfolio, but if it was in my trading portfolio, would I maybe be rotating some capital from here over to some of the other names that are equally as high quality that have been coming down? No, I would gladly do that pivot. So keep that in mind. Moving on to Meta, a company that was a great pivot opportunity, right? We were daily oversold conditions right now. On the Friday session, we were up 2.25%. That being said, we were in daily oversold conditions, which I pointed out doesn't happen too often. When you look at historical standards, usually it tends to mark a local bottom, especially if you couple that up with a nice area of support, which was down here, 600 down to about 550, yeah? Nice area of price action in the past. There was a big battle here during tariffs. We've retested it again. Daily oversold conditions. Meta down 27% from the all-time highs. Has it always been a good buying opportunity to pick up Meta 27% from all-time highs? Well, yeah, unless there's a fundamental change in the business, right? It's always been a good proposition, and this time was no different. Around 630 where we were, it was trading at a low 20s multiple, a 1.63 peg, and it was one of the cheapest Mag 7 stocks in the market. That being said, daily, good progression, but we still need a daily uptrend shift right here. On the weekly, this is still a weekly downtrend, so eventually they'll need to turn this around, so you may get another opportunity to lock in some swing trades, right? Because we're going to push, we have resistance above us, right? And then maybe they offer the good old reset of the weekly time frame. So if we're looking for swing trading, then maybe here is not the best proposition, because from here, I mean, where's your stop loss, right? Well, look where you're trading, yeah? You're trading from here up to resistance. So let's just put a stop loss below the lows and put it up there. What's your risk to reward on that? Barely 1-to-1? Does it sound like a great proposition? No, right? So can it still work and chase momentum up here and you get filled on a take profit level? Sure, but somebody else would be patiently waiting for these types of setups to where you can get a more manageable risk to reward. That being said, the last time it was down here was a great opportunity for some longer term shares. Is it still a good opportunity for some longer term shares? If you missed it, yeah, but just if you're a long-term buyer, right, you should be DCAing with your paychecks. So that being said, right, if you buy a little here and it drops a little bit down there, you shouldn't really care, especially if you're holding Meta for the next 5-10 years. So beyond today's video, guys, I know I say this every week, right? But we just went through a corrective period in the markets, okay? I know some of you guys just jump through the tickers with the timestamps. Those of you guys that do that, you guys won't hear this segment. But for those of you that just watch the video straight through, right, pay attention to this stuff, right? Because when we go into big market periods of correction, I'll do longer videos to explain all this stuff. But then if the markets somehow recover a little bit more, my videos are going to go back to shorter and shorter and shorter. And I'll kind of just say, well, it was a nice buying opportunity back here, but now, you know, nothing's available anymore. You know what I mean? So keep that in mind. Moving on to Microsoft right now. Microsoft, 1.34% to the upside, same concept. Microsoft down here, right, was daily oversold conditions. When does that happen on Microsoft? I don't know. Let's go look. Here, was that a local bottom? Sure. Here, was that a local bottom? Sure. Prior to that, what, 2022? Was that a local bottom? Sure. Does it mean it turns around instantly? No. Does it mean it's a good buying area? Yes, right? Focus on the areas. Too many people focus on buying the absolute bottoms, right? And it's probably never going to happen, but you can be buying an overall area. That being said, is it a good proposition to buy Microsoft every time it's down 15% from the highs? Well, I don't know. You guys tell me. Let's go back and check, right? Here was 15%. Was it good? Yeah. We got unwound from tariffs. Here, was it good? 15 from the highs? Yeah. This was a bear market. Arguably doesn't count. This was COVID, but still, right? This was 27%. But prior to that, 2018, let's say, 15% from the highs into the 12 EMA. Was it a good buying opportunity? I don't know. Just go back historically and you tell me whether or not that's the case, right? I love using history to try and make the best educated decisions, right? I was waiting for 4 months to Microsoft to come down here. Do you guys think I bought here, leaps, shares, and played the short put wheel with an area down here? Absolutely. And now we're up a decent amount of money on those buys. If they kill it and come down a bit more, because we know it's a daily downtrend, if we get rejected at resistance here, 496, 500, up to about 517, and we move a bit lower, do you guys think I care? Will I be adding to my positions? Of course I'll be adding to my positions, right? Sure, the weekly is down like this. The monthly also has a somewhat bearish tilt to it, right? Come down a bit more. This pocket here, 475 into support 450, 440 should be no-brainer buys if Microsoft is a company you're looking to hold into expansion over the next 2 years. In around the 475 region, which we were patiently waiting for, we commented on this last week. It was under 30 and a 1.66 peg. So you should have enough for everybody. The traders should be able to get a piece of this because of what I just said. The long-term investors should get a piece of this as well because of the valuation down there. There was something for everybody, but saying that this is the absolute bottom, no. Matter of fact, when it was down there, I was saying scale into it from here down to 450 because you're not too sure where it's actually going to stop, and that is still the case. If it does move a bit lower here on the retracement down, I'll be scaling into it more as we move into that location. Moving on to Netflix right now, and if I don't have time, guys, today for the biggest gainers and losers, I apologize, but I'm spending a lot of time on these names because they're the bread and butter of the market. If you can learn to trade the rotation between big tech names that arguably have the most toll booth-like business models, then you'll be able to apply this knowledge into a whole bunch of other names using technicals and fundamentals to your advantage. But I figure I should focus a lot on this stuff because it's the bread and butter trades, guys. They're the easiest trades in the market, right? Everything under these names on this options list right here are harder trades than you'll ever find in the big tech names. So when the big tech names offer you some good entries, maybe those should be some of the core positions. And then with excess capital, maybe you can play some of the riskier stuff. Sound like a plan? Perfect. Let's move on to Netflix right now. Netflix, same concept. Yeah. So Netflix, daily downtrend, right? Now into the 105 level, which was a low. And you might be thinking, well, we're in the middle of nowhere, right? Resistance above us, 111 up to about 116. And this is true. It's been a daily downtrend. It's been a weekly downtrend at the same time. Yeah. But the longer term bulls might be stepping in soon. Look, it's the 12 monthly EMA. Monthly candle close was not the greatest. However, we know that we're getting a good deal down here. Why? Well, because the valuation is a lot better than it was all the way up here. The forward valuation is a 32, forward price to earnings, a 1.62 peg, which is very manageable, yeah? Netflix is also off the highs here by about 20%. Has it usually been a good buying opportunity when Netflix is 20% off the highs into the 12 EMA? I don't know. Let's go back and check, yeah? This is 20%, was a good buying opportunity. For some of these highs, this low right there, that was 17%, right? From this high in 2023 down to that low, that's 24%. This is the bear market. Arguably doesn't count, right? Because the times are different. Inflation, interest rates, right? This high to these lows right there, that's 20%. This high right there to these lows right there, that's 20%. These highs in tariffs to the lows, that's 25%. These highs in 2018 to the tariff lows, that was 39%. But if you would have started buying here and scaled to the 26, it's a good opportunity. So if we start buying here and scale to support and the 26, Should we be rewarded in the next coming few months, few quarters? Yes, and that's how you build very high conviction positional trades, right? Support below us, 98, let's call it 100, flat, down about the low 90s. So I'm buying here. My next scaling in comes all the way down there, and I'm looking for the eventual recapture here of the monthly time frames over time, whether that happens in one straight leg or a couple legs, it doesn't matter. I'm looking to pick some of these historical nice areas to be buying into these high quality companies for my long-term portfolio, but also for any leap call option purposes or selling put options for the wheels. Some here, and then we're saving some buying power for some down here as well. Makes sense? Perfect. Go make dollars. Moving on to NVIDIA right now. NVIDIA down 1.81%, as everybody seems to have forgotten what was said during the GTC conference and what was also said during earnings. None of that matters anymore. Apparently now everybody is just going to buy Google TPUs. NVIDIA is never going to sell any more chips anymore. Obviously, that's an extreme, right? Hyperbole, to use that word. Now, can it be midway between the two? Yes. Will it possibly impact NVIDIA's gross margins? Yeah, but in like a year and a half, right? NVIDIA's guidance was absolutely insane. People forget the difference between TPUs and GPUs. I spent like 5 minutes on this last video, but I'll reiterate it again, right? TPUs are for task-specific purposes. Training an AI large language model is one of those purposes. Do all technology companies currently have their own large language models? No, there's only like 4 or 5 big players actually doing it right now. However, do a lot of the Mag 7 companies have a massive cloud business that they've had for 10 years that came before the use of chatbots and LLMs? Yes. What do they use to power that entire cloud ecosystem? Do they use TPUs or do they use GPUs? Well, you can only look so far as Google. For Google's entire cloud operations, not the AI large language model Gemini 3 that they're putting out now. No. Their entire cloud operations are still powered by GPUs. GPUs can do a lot more heavy lifting and are broad purpose, tools as opposed to TPUs, which are task-specific purposed tools, which are some of the big companies are using to train models on. But people forget about the hundreds of billions of dollars in other cloud offerings, such as data storage, data optimization, that are offered by Amazon, Microsoft, Google, etc., yeah? Not to mention the whole host of other companies that need GPUs for various different tasks. So, is NVIDIA going out of business tomorrow? No. Is NVIDIA overvalued right now? No. Around 180, it's a 26 forward price to earnings at a 1.15 peg. Now, can some of their margins come into pressure over the next 2 years? Possibly, but are they going to go from 73% down to 50%? Probably not, right? They'll probably stay high. They have the whole CUDA ecosystem. They make a lot of other investments, other bets into other corporations for some equity, which can help them, of course. That being said, is there still an opportunity here on NVIDIA or is it finished? I still think there's a nice opportunity. Number one, we are in a daily downtrend right now. Yeah, it's been trailing the S&P, especially during this recovery. We're into a very nice area of support. We have not done anything on NVIDIA, arguably since the month of July. You're still down here. Is it a nice opportunity in the low 170s to be picking up some shares? If you still believe in the long-term thesis, yes. I will not force the long-term thesis on you. That's up to you to decide. But if we do follow the long-term thesis, is it a good opportunity to DCA some shares? Sure. Am I playing the wheel on it down here into support? Yes. Weekly timeframes right now, have we unwound? Yes, as well. The monthly timeframes, are we just into natural consolidation? Yes, additionally too. Do I want to be positioning here down into this location, call it the low 160s, down to below the 12 into huge support down here in the 150 region? Yeah, so it's this whole pocket. I'm not saying this is the bottom. I am saying though that I'm scaling in from here down to there because I feel we're getting good risk to reward now at this current time. But I do want to position a bit here just because if that's the bottom, well, at least we're going to be in. But I do want to save some buying power if we do go for the full monthly retracement to the 12, something that NVIDIA has often done during the past, even throughout this massive bull run. So please keep that in mind. Moving on to Tesla right now. Tesla, 0.84% to the upside. Beautiful daily uptrend breakout right now. MACD is crossing as well, looking very solid right there, right? Daily uptrend, recapturing resistance slightly. 430 down to about 416, 415. Huge area of prior resistance, current prior support, which is current resistance for the markets. Recapturing the EMAs, not too bad. Weekly timeframes as well, right? Weekly was a downtrend. The bulls putting in a very nice retracement size on the weekly. This is currently a 50% retracement with a strong weekly candle close. Can it go a bit more? Yes, absolutely can go a bit more, but was the entry, the optimal entry down here potentially? Yes, as well, right? Upon the shift in terms of the daily uptrend, was a very nice entry. Overall, Tesla monthly backtest as well of previous resistance. Resistance, now support, 400 down to 385, not too bad. We never came back and filled the 12 EMA. But if you just go through my recent discussion across all of these, right, sometimes it's nice to attempt some positions prior on entry. Now, I don't have any swing trades on Tesla. I took a lot of other trades on other things that had a bit more clear price action, in my opinion. But Tesla not looking too bad for the good old breakout retest. If rate cut, well, obviously rate cut odds help Tesla a lot. But if the broad market continues to be good, can we see Tesla with a bit more appreciation to the upside? Yes, but a lot of you just will never position in Tesla because you focus on the short-term car business, which is, which has a lot of short-term negatives against it right now. But the people in Tesla for the long-term positives, you guys maybe still think the stock is still cheap, right? So I'm not telling you which side of the aisle to be on. I'm just pointing to the fact that if we are buying Tesla here, the only way that that makes sense is if we're focused on the long-term positive, right? Because we may not be through the short-term negatives just yet. Moving on to Palantir right now. Palantir down, or excuse me, up 1.62%. Daily downtrend on Palantir, right? And now we got a nice bounce going right now. So the size of the bounce on the daily is pretty decent right now, 78% retracement. That doesn't mean that we're going to V-shape absolutely everything and just go like this. No, we have a few things in our way. Number one is big resistance up here, which I will gladly turn red, excuse me, because we closed the week below there. Yeah, this is big resistance. 170 up to 185 is big resistance. And we're also below the EMAs. If we get rejected right here, can the bulls make an attempt at doing a two-step recovery process for the daily uptrend? Yes, as well. If we get a bit of a retracement size down here, would I be interested if I'm a Palantir bull, right? And I can get beyond the valuation and I'm looking to trade this with some distance. Would I be looking for some short puts below here? Quite possibly, especially if the market continues to stay bullish. Is this a very nice weekly retracement? Yes, it was a nice weekly uptrend. We lost it. Now we're going to have to fight to get it back, but it may not be in one V-shaped recovery like Palantir bulls are used to. Maybe they need a two-step recovery process to make that happen. The monthly, though, did have a very nice retracement down here. This is how the monthly closed. We recaptured almost half of the monthly move. Not quite half, but almost. Let's call it 40%, right? Cooled off the monthly time frames a little bit, but did not come down to the 12. So if I'm looking at position or having some short puts active, I don't want to go too heavy, but would I nibble a little bit on some short puts? If I can get like a 140 strike close to this 12 EMA, yeah, because usually Palantir has been a good buying opportunity around that 12 EMA, but you got to get beyond the valuation. I'm not forcing this trade down anybody's throat. You guys are free to do what you want, but I know a few people want to trade Palantir. So if we do want to trade Palantir, that's how I would be trading it, but I would trade it with a reduced amount of size. Would I be looking to add any Palantir shares up here? No, unless I had like a 5-10 year time horizon. And I do believe the company is going to grow into its valuation or grow into $1 trillion company. That's the only way that you can make sense of buys up here on Palantir overall. So keep that in mind. Moving on to SOFI right now. SOFI up 4.33%. Look at that beautiful move on SOFI, right? Daily downtrend, nice engulfing. Switch of the MACD right now as well, which is very strong. Nice engulfing move into resistance. Resistance 30 down to about 28. We talked about this for a while. Here as resistance. Here as support for a while, again as resistance, and now we're trying to crack through it back above the daily EMAs, which is fun. If the move gets topped out here and we get a bit of a retracement early on in the week, tons of space off the lows, anything above 23.5, looking for a new higher low, possibly for further trend expansion. If we get that higher low in motion and we start moving down, will I be once again selling short puts down here to make some premium? Absolutely. That's the monthly range, 25 down to low 20s, previous highs. Support for I don't know how long, but it's been support for a very long time. Let's call it the last 3 months. Every time we move down into there, the bulls have something to say, which is why I was playing it so heavily down there. And we did say as well, upon this revisit, below 27, it was a great buying opportunity for some long-term shares. At 29, is it still a decent, objectively speaking, opportunity to add to some long-term shares? Yeah, but you have to have a long-term time horizon going for the expansion of the business to a 45, 50 plus $billion company, right? If you're looking to just trade this, well, the risk reward is no longer optimal. Arguably, you've waited a bit too long. The risk reward started being really favorable into this location to build some swing trades. Right now, you're kind of equal distance from the highs to the lows. So swing trading doesn't make that much sense unless you just want to close your eyes and say, I'm just going to play momentum. That's fine. It can work out sometimes, right? But usually, I would like to see a bit of a retracement here. Give me a better risk reward entry, right? Define stop loss down there. And then we go for expansion beyond the all-time highs in a 35, 40, etc. But you guys are free to trade the way that you want. There's not only one way to trade. I'm just telling you guys the way that I enjoy short-term trading on these names and whether or not it's a good opportunity for some long-term positioning. SOFI looking good. Monthly candle close up here, which is very strong, right? The bulls played great defense, and now we might be looking for a bit more, or even if we consolidate early December and give another tail into the early December region, right? Short puts down here, wouldn't be opposed to doing it. Two last ones and then we're done for the video, guys. But I'm spending a lot of time on these because a lot of the market, man, a lot of these trades right here is going to look the exact same. They're going to look arguably exactly the same. So whatever knowledge that I'm able to provide on these big tech names, hopefully you carry it into the rest of the market. On to Uber right now. So Uber up 2.19%. We were talking about this one down here as well. No, we did not exactly come down into support, but very close. But we were looking to pay attention to it down here. Why? Daily oversold conditions usually is a good time to buy Uber. Daily oversold. Yes, it can be good areas to look into Google or look into Uber when it gets daily oversold. Does it mean that that's necessarily the bottom? No. Does it mean the bottom is maybe close? Yeah. So if we're looking to play Uber down here, knowing that it can slide a bit more, but we have confluence here. What do we have? We have daily oversold. We have a monthly EMA that was just cracked. We have previous monthly resistance, which is current support. So do we want to position here maybe with some short puts? Yeah, could be very interesting. Maybe we want to nibble with some shares while it's currently oversold down here? Yeah, but saving some money for maybe down here? Yes, but not doing anything here when we've been waiting patiently for Uber for like months and they give you a great opportunity? That's a missed opportunity in my opinion, right? Even if we can move a bit lower because the trend is your friend, we can move a bit lower and challenge us down here. I'll be buying down here as well. But in the event that this was actually the bottom, I don't want to forfeit some great signals that I'm getting, right? That being said, if we do move a bit lower here, because the bears are still in control, resistance above 90 up to 93, if we do move a bit lower, selling puts down there, again, I'll be a fan. Buying some shares for the long term, I'll be a fan because the valuation is good down there. 83, 1.5 peg, low 20s multiple, 5% free cash yield. Yes, please. Monthly retracement. Very decent, right? Yes, please. In the 12 into prior levels that we've been waiting for, literally, guys. I've been waiting for that trade for months. They finally gave it to me. Sweeping on the weekly right now. And the monthly candle close, not too bad. Can we get a bit of weakness early December? Revisit these areas? Sure, but it would be a nice buying opportunity, again, on Uber, in my humble opinion. That's just me. Feel free to do whatever you like. Moving on to TSM now. Lastly, TSM, 0.53% to the upside. This is a nice engulfing move, yeah? Engulfing the recent highs, almost 100% engulfing, back above the EMAs. Does it mean that we can't move a bit lower and retest? No. Matter of fact, we definitely can do that, right? A little bit of a gap left behind here into the EMAs, but now we definitely have a big old level right here. The bulls have been defending, right? It doesn't look like much, but it is there. This whole 270 here, I can put a little box there if it makes your life easier here. This whole area, the bulls have been defending. Yeah, let's call it 280 down to about 270. Nice defense down there by the bulls overall. So we will see if they can convert this to a new daily uptrend, put an end to this weekly leg of selling, which we were watching, right? This was the weekly downtrend, arguably, right? Top. Now we got the weekly downtrend in there into the 12 EMA. We were saying it was extended from the 12 EMA on the weekly. Now coming back into it on the monthly. We never got truly down here, yeah? Not even close. Even here, I was looking at some short puts for the monthly. Not close. So unfortunately here we have a discrepancy between the time frames. The weekly told us it's a nice opportunity maybe for some long-term shares, right? We sold off 14, 15% from the highs. The valuation was still decent here for some long-term shares. However, did it give us the deep cut retracement to give us the best risk to reward using prior history, maybe for some leaps or some bigger short puts? No. Was it a nibble maybe for some longer term shares? Yes, and that's the discrepancy, right? Some of these names here provided the best opportunities for leaps and or short puts. Other names on this list maybe only provided us slight little entries for DCAs for long-term shares. Not all of these tickers are built equal. Sometimes you had fundamentals, which were okay, but not the technicals, like TSMC. Fundamentals were okay for a bit of a nibble for some shares in a long-term portfolio, but the technicals didn't pull back nearly enough for me to be interested in leaps, nor interested maybe in larger short put positions, right? Other companies on this list had both nice fundamentals and full technical retraces. So if you guys are wondering what charts I did leaps on, or what charts that I did short puts on in a big fashion for my big account, we'll just go through what I just said for all these names again, and you'll probably be able to see easily which of these companies maybe only got a nibble for long-term shares for my long-term portfolio, and which other companies got leaps and short puts. It should be fairly obvious from the way that I've been talking about these charts so far, right? So rather than just giving you guys fish, what I know is what a lot of people want to do. I mean, the Discord members get fish, but if you're not in the Discord, if I'm on the YouTube channel, right? And even the Discord, right? I want people to kind of learn where my trades come from and why, as opposed to just giving my trades without any context whatsoever. That's why my videos are so long, because I give a lot of context behind a lot of this stuff, right? A lot of people, they just give levels. Just give levels, just give the valuation, just say, all right, here's a long, here's a short, here's a long, here's a short. This is support, this is resistance, on to the next chart, right? But I think you guys watch the channel because of the context that I provide. That being said, we won't have time, sadly, for the biggest gainers and losers of the week. We did it a ton last week, so you guys should know where I stand across all this stuff. We covered it in the rotation today as well, so whatever's discretionary in here, you guys know my thoughts on it. Whatever's printing the highs recently in terms of recovery sectors right here, you guys know my thoughts. We covered them so many times last week. Just go watch one of the videos last week where we touched upon the biggest gainers and losers. We literally covered all of them. In Wednesday's video, I also reiterated my top 20 stocks that I was looking to position for some shares for long-term buy and hold portfolios, or some growth companies that I'm looking to swing trade for the next 2-3 years. We covered everything. So today I focus one last time on how to tie together the pieces of the overall puzzle, right? Bearish narratives versus bullish tailwinds, short-term indicators such as fear and greed, such as the breadth indicators that we saw right here, right? These institutional flow as well, the Zweig breadth thrust indicators, putting all that together with the narratives, with the price action to paint a picture of the overall market, which is going to help you position, right? But too often people have extreme views, right? You guys want to be right rather than rich. You will come into the markets and say, 100% it's flushing from here. 100% Monday's going to be red. 100% the next 3 weeks in the market are going to be red. This is just a massive bull trap. And for sure, we're going all the way down there. You don't know. Other people have the opposite view. That was the absolute bottom. We're moving towards the all-time highs. I'm going full in, I'm going YOLO. You don't know. And neither do I, right? You should always come into the markets with a thesis, an open-minded thesis, an open-ended thesis with an invalidation point. If you have a thesis that this is just a bull trap and we're going to fully unwind, where's your invalidation point? Will you be doubling down on a break of the all-time highs, putting more shorts, putting more shorts, putting more shorts? Where's your invalidation point, right? Do you want to be right or do you want to be rich? Every thesis, whether you are long or short right now, needs to have an invalidation point. The worst thing that you can do is come into the market with a set point of view, with a thesis, which is fine. The worst thing is not having an invalidation point to your thesis. All the best traders, all the best investors in the world have an invalidation point to a current thesis. So keep that in mind, right? Never think in terms of extremes. Never think in terms of absolutes. There is something to learn from here from everybody. I'm not telling you guys to be super bullish on the markets. I'm not telling you guys to short the markets from here. I'm just saying, whatever thesis that you come up with, when you put together the pieces of the puzzle, right? You might agree with me, you might not agree with me, and that's fine. But at least, okay, if you're putting together a thesis for a short or a long, please have an invalidation point for that thesis. Please understand the risk to reward of your trades. Trade with a stop loss, right? And if your thesis gets invalidated, don't keep doubling down. That's arguably the worst thing that you can do. That's how people end up with very massive losses, and they don't understand why they're not right. Right? Why is the market going against this? I need to be right. Well, it's like my mentor always told me, man, do you want to be right or do you want to be rich? And the difference is somebody who wants to be rich has an invalidation point to their thesis and does good risk to reward trades. Somebody who only wants to be right when the market is telling him something different from the narratives or from the price action, they will refuse to close their positions and look the other way because they just want to be right all the time. But that costs you money sometimes, right? So that being said, guys, that's everything I had for you guys today. Hopefully you guys enjoyed. If you did enjoy, consider dropping a like on the video. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. We do these videos every Monday to Friday after the close, except for sometimes when I'm busy. I do them on Saturdays. Hopefully you guys appreciated today's video. And last but not least, if you have any questions or comments or feedback, always feel free to leave it down below in the comment section. We'd love to hear from you guys. We're at almost 11,000 subscribers, man. So thanks to all you guys who've subscribed to the channel, engaged with the channel, left your comments down below. Can't wait to read more comments from you guys. And If you guys were tired of trading and investing in the markets all by yourselves and you wanted to do so as part of a trading and investing community with over 300 members, you may consider joining our trading and investing community. Matter of fact, I have a big Black Friday coupon code which expires tonight at midnight. I know it's not a lot of time. Maybe I'll extend it till tomorrow. Actually, you know what? I'll extend it until tomorrow because this video and tomorrow's top 5 options plays, I'll leave it good till Sunday at midnight type of thing, right? Well, Sunday, 11:59 p.m. Coupon code is Friday in capital letters. You get 40% off your first month if you wanted to try out our Discord service. In the Discord, you get a few key things, which I keep bringing up on the channel. Number one, you get access to all my trades. All the trades that you see here every single week that I do them in the small YouTube account or in my larger account as well. I'll post a lot of trade ideas for my larger account too. You get access to all of them, man, whether it's the wheel trades that we do, the call debit spreads, the leap call contracts, the swing trades with shares. You get access to everything that I ever do. Also, all of my long-term portfolio positions as well, you get access to as part of the Discord, as being a Discord member. You also get access to our private morning live streams. Monday through Friday, I do live streams at the open for about 2.5 hours where I trade the markets live, and then I take all of your questions on your stocks, your options, and your long-term portfolios. It's a great place to ask me all of your questions. If you're curious about a company or an options play or anything in between, it's a great place to ask me because then I can show you with the charts, with the fundamentals, and why I'm structuring my answer the way that I'm structuring it, right? A lot easier than asking me a question in the comment section of a YouTube video because then I can't provide the best context, and obviously it's tough to describe things in a text-based format when there's a lot of technicals and fundamentals that come into play and sentiment. After that, guys, you get access to our private video educational section. I have about 15 hours of content in there where I take you through the way that I do technical analysis, fundamental analysis, different trading strategies, right? My leap strategy, my debit spread strategies, my other wheel strategies that I use for my account, right? All of the trading strategies and all the information that I use when I talk about during these YouTube videos, right? If you want to pick my brain, all of my high-level educational content is in that private video section, 15 hours. That's where a lot of people learn a ton of information, and I will not put that information ever on YouTube. That's for our members specifically. Thereafter, guys, you also get access to our chat rooms. You can ask me questions all throughout the day. I'm very fast to answer, so if you guys can't attend the live stream, it's a good place to ask your questions, and of course, chat with all our other group members. And last but not least, if you guys can copy paste all my charts whenever you guys see support resistance levels on Amazon, stuff like this, and fundamental breakdowns. You can copy paste all of my hundreds of charts, all the supports, all the annotations on them, right? It's literally a few clicks of a button, takes 15 seconds. You get access to all my charts, all my watch lists as well. So at least you guys can just get a head start. If ever you like the stuff that I do on it, you can literally just copy paste mine and then build off on your own from there. So those are just a few of the perks as part of being a Discord member. If you guys are interested to join, as I said, I will never do another discount like this, 40% off, but I figured it's Black Friday, right? May as well offer the chance to people who've been willing to explore the service. 40% off your first month. Just use the promotion code, capital letters, Friday, during your checkout, and it will apply that 40% discount. Hopefully I get to see a few more of you guys in there soon. And if not, I'll see you right back here on the channel. That's it for me. Enjoy the rest of your weekend, guys. Take care. Come into next week rested, relaxed, and ready to trade because we could have a bit of volatility into next week, right? So take care, guys. That's it for me. Peace.